All right, welcome to the Wednesday Hidden Monkey Daily Update. All right, I'm going to make this real brief today. Nothing much to report. As you can see here, the market closed down about 0.71%. IV rank rose, as you can see here, to 47.71%, right around here. OBV cross kind of rolled over a little bit too. Okay, slow stochastic cross 50 is still green. In fact, the cross 50 yesterday turned green yesterday. And as you can see, the ADX turned over. Let me kind of load up my normal study set that I used at the basic one, which is cleaner right here. Okay, so um, Tom's happy. They're happy today because they're more bearish. I'm not. I'm more neutral. I'm more non-directional because I don't want to be stressed out about taking a directional position and having to be right. I'd rather just play this vol collapse and collect premium where I can. So while I do want the market to be more volatile, because when it bounces up like this and IV rank pops up like this, I have something to sell. But that doesn't mean I want it to just drop all the way down to the bottom or whatever. It doesn't help anybody. I like a two-sided market. It gives me more opportunity to trade. Let's add that ADX. How do I do this? Let's add that study here. Hold on, whoops. Let's go to, no, I'm sorry, studies. Let's go add that quick study real quick. The ADX, average directional, it's ADX. So if you can look, see, remember when I said when it got down here and ADX finally started to turn downward, it got as high as 32.33, which is what happened back the last time this happened in February. Once it started to turn down, you could see the change in direction. Okay, so it got as high as, what is this right here? 33. Yep. Then it started to turn over. Look what happened back in February. I'll zoom out. In February, we had this big downturn right here, February 3rd. See the ADX cross up there, and then as soon as it turned, it got as high as, what is this? See, 32.33, right? And it didn't stay there very long. Just like IV rank didn't stay at 100 very long. Okay, so not much. Let's see what's going on in ES real quick. So tomorrow, IV rank is high. It's over 35. So if you don't have anything on, feel free to put on some golden geckos. You can go small, though. You don't have to go large. And just in case IV rank pops, you keep some ammo so you can add on more positions, all right? ES, this is after hours. Let's zoom in real quick. Give me a second. Let me try zoom in. I don't know why it's not zooming in. Here we go. Whoa, too much. Oh, wait, let me just slide over here. Too much. Let me zoom out real quick. All right, so this blue tick here is today, and this is after hours. So, we're unchanged anyway. So let's just see what happens tomorrow morning. Now, what if you're looking for something to trade and you don't want to trade something that's low IV rank? You want to trade something like 47. You're looking for something that's about 100 or so or high. Let's go to Dole. Click on grid page. Go to your notable stocks or high option bonds, whichever one. You can check both. Make sure your filter is set to hide earnings and IV rank set to 50 or greater. All right, and you want volatility set decreasing order. All right, FXC has a high IV rank. I actually have a whole new trade on that. I'll show you that in a little bit. EWZ, if you're gonna trade this I think on Thursday or Friday. As you can see, IV rank is collapsing because they have elections. But this could be a huge move. So if you're worried or you're new, you might want to stay away from this. This is oil. This is an ETF. I like these ETFs that you can trade. In fact, this whole top row is ETFs. All right, so let's take a look at FXE. It has a high IV rank. All right, and while that loads, I'll put it up on the chart here, FXE, at the same chart. Okay, let's go back. And you don't really need a chart to trade. All you really need to know is you want to know high IV rank and you want it liquid. So let's find out how much we can collect on this if we do a strangle. So repetition is the mother of learning. I'll do a strangle real quick, and let's see what we can collect here. I got my default settings set here. Let's see what we got. It says I can collect, I can sell this for 67 cents. So someone's willing to buy it from us for 67 cents. Let's see if that's enough. To find out that's enough, we want to collect 19.8% of the expected move. All right, what's the expected move? Let's go to Thinkorswim. Hit your trade tab right there. We're gonna look for the same 58 days expiration that we saw in Dole. See, 58 days right here. Okay, so now let's go back. And you see in this parentheses, it says expected move up or down is $3.20. So open up your calculator here. And hold on, give me a second. Let me open this. $3.20 at that. So let's clear this real quick. Let's go with $3.20. We want to multiply that by 0.198, and that equals, we want to collect at least 63 cents. Look, perfect, right? We can collect more than that. So now that we know that we can collect enough, and we can collect at least 19.8% of the expected move, we can go ahead and place our Golden Gecko. Go to strategy, go to Iron Condor, make sure your default settings are correct, okay? Strikes are 5 wide for now, that's fine. This is what I call a mini Golden Gecko. Alright, and here you go. Now you can see, look, the $5 wide strikes are even farther out than the 2 standard deviation line. And what that does is, if you click on show, here, this is over a 10% return on capital right here. Okay, why? Because if you collect the whole amount, you're going to collect $61, and the most you can lose is $539. So that's a return on your risk of over 10%. Okay, not bad. This is 0.2. This is total return on capital. That's 0.23% per day. Okay, so you have to take that and multiply that by the number of days. All right. Now, so if you want to top less capital, see, all you want to do is your buy strikes. These are your buy strikes. You want to move those in so this point is lined up on this 2 standard deviation line, which is really a Golden Gecko. So it's as close as you can. Or there we go. No. Okay, let's see what that did. Look, our return on profit, product profit is 20%, and you had a higher return on capital. Okay, but of course this went down a little bit, and you can, you can collect whatever this mid price. See where it says mid right here? That's what you can collect. Just collect that 55 cents, and you're good to go. If you don't have access to Thinkorswim, you got to do a little bit more math. Okay, so what you're gonna do is you're gonna take that same strangle. Remember we had that strangle. I'll just go there, just easier. So no one get confused. Go back to that strangle. Click on strangle, right? Click on go. Take this 67 cents and you want to multiply that by, like, let's say 1.25, let's say. So 67 cents times that by 1.25. All right. That's, oh no, I'm sorry. God, what am I doing? I screwed up. Okay, sorry. Go to strangle. Okay, I'm gonna start from the beginning. Sorry, my bad. Go to strangle real quick, right? Go to go, and then what you want to do is you want to bring in these strikes. See what seesaw is with? Bring it in until they're right on top of the trading price, which is about 124. See, it's 124 here, and bring them to they're right on top of each other, like that. Okay. Now look how much you can collect. 3.06. You take this number. Okay, this is called a straddle. Okay. Or my nickname for this is a honu trade. Honu in Hawaiian means turtle. If you trade this and you put on this trade, you really want the stock to not move. You want it to stay right around here. But anyway, for Golden Geckos, to find out the expected move, if you don't have Thinkorswim, do it. Put on this straddle right here and look how much you can collect. Take this number, that $3.06, and you want to multiply that by 3.06 times that by 1.25, and there you go. The expected move is $3.82. You want to be able to collect 19.8% of that. So then you multiply that by 0.198. Okay. Did it work? I don't know. Let me just make sure they did it. Yeah, 3.825 times. You want to try to collect around 75 cents when you do a strangle. Okay, so that's pretty close. Watch this. Go back, click go, and the strangle is 67 cents. So roughly the formula is not 100% accurate. You want to do around 1.25, 1.2. So if you take 3.825 times it by 1.2, you're looking at, that's the expected move. You take that $4.59. Oh, wait. No, that's right. 3.8. I'm sorry. 3.06, I think it was, right? Times that by maybe 1.2. That gave us, gosh, my math. Okay, anyway, that gave us, oh my God, 3.06 times that by 1. What's wrong with my calculator? $3.67. Take that number, times that by 0.198, and yeah, you want to collect at least 72 cents. So we're real close, okay? So go ahead and, that's how you can figure out your expected move. And then from there, just do your golden gecko as normal. Okay. So FXC, you could do one for FXC. Let me clear this. What else can we do here? EWZ, you could do as well. Let's look at FXC on the chart. Look, see how beat down it is? I'll zoom in. It's taking a huge hit. Okay. So I'm going to zoom in just a little bit here. All right. So yeah, it's in a bearish pattern. So you're not really bullish. Okay, it is beat down though, so you're expecting a rebound like it did. So we're gonna stay in the range. That's why I love going here because I have no idea which way this is gonna go. All I'm doing is I'm betting that this high IB rank of 83 will come back down here. Because look, for the last year, it hardly got it. It's only been up this high the last few months, right? Last month, 2 months or so. I'm expecting the IB rank to drop, so you can go ahead and trade that as well. Go back to Doe. What else can we do? Here's oil. Oil's been beat to hell too. Let's look at oil. Same thing. This is how easy it is, right? Go to strategies. Go to strangle. Let's see how much we can sell this for. We can sell this for 48 cents. Okay, so a lesson. You want to try to collect more than this. You want to try to get at least $1 in a strangle. So when you put on your golden gecko, there's some meat on the bone there for you. All right. So let's find something with some meat on the bone. See, it's a cheap stock, so the reason why FXC was so good, it was a higher price stock. So look at XRT; it's double the price. So still IB rank over 50. Let's do a strangle. How much can we sell this for? Better. Look, we can sell this for $1.30. What I don't like about it is these teardrops. Let's see how wide the bid-ask spread is here. It is 30 cents, way too wide on XRT. So this is not a good thing for you to trade. Okay, let's find something else a little bit more expensive. That's cheaper. IWM is higher, right? Yeah, you could do TNA or IWM. Let's look at IWM, which is the Russell 2000 index, right? Let's see how much we can collect on this. Go to strategies, go to strangle, click on go. We can collect $1.38, and it's liquid. There's no liquid teardrops, right? Perfect. Is that enough? Go to toss. Type in IWM. Enter. Click on your trade tab right here. Okay, find the same expiration date. Let's double check it. 58 days, right? Yep. We can go lower if you want. I have it set to 56 days, but anyway, let's go back to just for exercise purposes. What can we collect? It says $7.95 is expected move. So $7.95 times that by 19.8% or 0.198. That means I want to collect at least $1.57. Not quite there yet, okay? But close enough. I trade this, okay? I like to stick in the SPY, but this has a nice high IB rank. Okay, you could trade this. If you want to try and collect at least $1.57, you have two options here. There's two schools of thought. Right now, your break-even points are right here. As long as IWM is greater than 97.62 and less than 120.38, you're going to make money. So you can either try and collect more, okay, by bringing in the strikes, okay, to get this to $1.50, like right there, okay, and you can collect at least 20%, but you're not quite one standard deviation out of the money, okay, or, and your profit is 70%, or you could just move the strikes back out to maybe one more strike wider just to give yourself some cushion. All right, collect less though, but your profit goes up. That'll be your call there. Now that's a strangle. When you put in your golden gecko, of course, just go to strategies, go to iron condor. The settings are the same. All that does is add these top parts on. Okay, so sure enough, you can bring them in a little bit to collect enough, or move. I guess move the wings out. So either way, you got to move the wings out. So what you do is, if you wanted to collect more, click it in one click because that's what it was the last time, and then drag these suckers out to the 2 standard deviation line right here. Right, and collect this $1.40 and go for it. Place the trade. You have a 70% probability of making a profit. Now the market measures, okay. Now realistic, when you do a strangle like these, 1 standard deviation out of money, your probability of profit is around the 68 to 70%. The market measures have shown mid 80 to 84% success rate. Why? Because your high IB rank gives you that edge. Okay, so it's pretty neat. So this is another idea. All right, I just want to give you guys some ideas. You guys have a great night. Watch the World Series, whatever, and we'll talk to you guys tomorrow. Peace.